Chinese shoppers still love Europe's luxury brands, or at least that seems to be the message from earnings season. Gucci owner Kering reported its quarterly numbers on Tuesday, and it's just the latest big name to defy fears of a demand slowdown. Like-for-like sales up by almost a quarter to over $4 billion. Reuters' Sarah White in Paris says Europe's high fashion brands are faring best with Chinese shoppers.
It's not the same rosy picture all around. The companies that produce watches have suffered a little bit more than others. Their biggest market is Hong Kong, and Chinese touring spending there has fallen off a cliff in the last quarter. So they've suffered a little bit. Some of the US luxury groups, I'm thinking Michael Kors, Coach, Tiffany's, they've also pointed to lower Chinese tourist spending in the United States. So it's a little bit of a mixed picture, and that's kind of expected to continue throughout this year.
Now Kering's mounting cash pile has analysts asking if it's thinking about acquisitions. It also owns Saint Laurent and Bottega Veneta. But 80% of its sales come from Italian brand Gucci. It's been one of the fastest growing fashion labels in recent years. That after a flamboyant revamp under designer Alessandro Michele. It's now neck and neck with Chanel in the race to catch up with the luxury market leader, LVMH-owned Louis Vuitton. Kering shares still down around 16% from last June's peak though. The whole luxury sector has dropped on fears of waning Chinese demand and the impact of a trade war. After bumper numbers from LVMH in January, Kering's earnings suggest those fears may have been premature.